let's move on to Barloworld next, right? So now we're bringing it home to South Africa. It owns and distributes those Caterpillar and Bucyrus equipment we've just been talking about with its major licensed distribution relationships in sub-Saharan Africa, in Iberia, that means Portugal and Spain, and Siberia. Interesting that they've got those licenses. They're also a big-ish player in motor retail here in South Africa, car rental, that's the Avis business, fleet management, and some logistics businesses. So that's what's basically left from what was once a very large industrial group in South Africa that owned many other assets which have been spun off that we're not going to talk about today. Market capitalization 19.5 billion rand, not too small, not too shabby. Dividend yield 3.92%, price to earnings ratio 9.23. And straight to the graph, let's have a look at that. Well, that doesn't look too bad.
Yeah, so look, this has been a sort of value stock for some time, and it's interesting. To some extent, it's a South African proxy for Caterpillar, and that's really what you see. So when Caterpillar reports, and they report sort of muted demand, you see an immediate feedback into the Barloworld share price. And notwithstanding, they have become somewhat more diversified. You mentioned the fleet and the car rental, and that has sort of obviously balanced their portfolio significantly, but a large part of their business is still reliant on Caterpillar end user demand.
And they were doing fine on that because, you know, there are iron ore mines being built around the place. There was some copper activity up in the Zambia area. Locally, coal was sort of doing well, and there's some colliery expansions and so on and so forth. Bucyrus was doing well in that regard. And I know that within Caterpillar's world, the Barloworld guys are held in very high regard. Talking Spain, I mean, that there was a disastrous slump, but it seems like it's kind of picked itself up again, and there's a bit of activity now in building, you know, new condos on the Costa Brava and all of that. Siberia, I don't know. Russia, probably not a good place. So right now, Clive Thompson and his boys must be sweating a bit to maintain earnings and sales outlook. Huh?
Yeah, so interesting. If you looked at their interim results, they were actually reasonably credible. I think given you the difficult environment that you've just painted, they've been focusing quite a lot on the aftermarket. I think there's also been some specific projects that you mentioned that have carried them through. You know, they need to supply to one or two large projects, and they would sort of make some of their numbers.
By aftermarket, what do you mean? Is they sort of design a deal where they not only sell the equipment, they also finance it, and then they also provide an after-sales maintenance program so that the equipment stays in top condition.
That's right.
And they've got their own teams of people, and then you get an annuity revenue out of that.
Yeah, and I guess, you know, it's somewhat counter-cyclical, because if there's less procurement of new plant and equipment, there'll be obviously continued maintenance of the existing plant. And so that business sort of grows where maybe the new suppliers aren't.
Okay, but just two quick additions. Motor retail sales have been rather depressed. I'm not quite sure why. Maybe people have been anxious, so that's a marginal net negative. And then the motor rental, car rental business, I'm finally beginning to see that that's starting to take a little bit of tap because of people using Uber instead. I don't know how significant those are to Barloworld, but are those two long-term concerns as well?
Yeah, I mean, the new car sales have sort of reflecting the weakness of the domestic economy. Have been very soft, and I think softer than sort of the year forecast. So that is negative. Also, sort of a large interest rate sensitive play, given sort of and the outlook for interest rates. We've already had a rate hike, and I think we're into a tightening cycle. They're quite heavily geared as well, just in terms of financing their significant asset base. And so, yeah, you're seeing it again reflected in the share price. I think very sort of muted expectations. I think good sort of operational performance, but the outlook is a tough environment.
Okay, and unfortunately that probably tells me in advance we're going to lean towards not hot on this one too.
Yeah, so I mean, it's a good way to play the cycle again, but I don't think we're at the point where, you know, it's attractive to play the cycle. But if you can pick it up at the right time, it's geared to a recovery.
And I think it must be said that as far as most retail investors or those that aren't playing with other people's money, the idea of trying to call the cycles is itself an intrinsically difficult thing. So maybe one should err on the side of caution with regard to stocks that are so intensely cyclical.
Yeah, I guess so. I mean, you're getting a good dividend yield and a low PE, but it's probably going to sort of move sideways until we see sort of you know, some improvement in the outlook.
Okay, so we're leaning towards not hot on that one too.